Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial. Welcome to the story of Stephanie, a high earning young professional. And thank you for choosing a video about insurance. Admittedly, not one of the most exciting topics you could have chosen from on the internet, but definitely one that your future self will be most likely to really appreciate that you took the time to do today. So Stephanie came to us with perhaps a greater awareness than a lot of young professionals about the potential risks to her financial security related to her own health and wellness. And the reason for that was her own experience watching her mother at age 40 receive a breast cancer diagnosis and go through treatment without any long-term disability coverage, either individually or at work. Stephanie was in high school at the time, and she watched her mom struggle as a single mother to keep the family afloat during that difficult time. And Stephanie was very aware that when she was a working professional, she would want to make sure that she was well set up in order to weather any potential surprises that life might have in store for her. Now, I'm going to go ahead and screen share here, and we'll talk about other aspects of Stephanie's life. Stephanie lives with her boyfriend, Dan, in New York City. They met shortly after Stephanie graduated business school and moved to New York, and they live in an apartment that Stephanie bought on her own. Stephanie helps out her mom financially, and career-wise, she's able to do that because she is a third-year consultant at a global consulting firm and is compensated very well. She makes about $360,000 a year, comprised of 250 base plus 110 of bonus. Now, before business school, Stephanie was in a different type of role, but is still very high paying as an analyst in an investment bank. And through that combination of a history of high paying roles and being a very diligent saver, Stephanie has already accumulated a meaningful net worth of over $400,000. Health wise, Stephanie is in excellent health and takes one medication to help manage her anxiety. Let's take a quick look at where we're going to be going in future videos and the different types of insurance coverage we're going to talk about. You'll notice disability income insurance jumps off the screen at you as, yes, this is mission critical. Stephanie absolutely needs to look at this ASAP. And the reason for that is that even if nobody else depended on Stephanie's income, she depends on her own income. She is not financially ready to retire given the goals she has and the lifestyle she wants to maintain. And so she herself needs disability income. Now, we already know enough about Stephanie to say that it sounds like she actually does already have other people depending on her income. And depending on what her plans are for the future, which we'll explore in future videos, she might plan to have additional financial dependents, such as children. And with term life insurance, the key question Stephanie will really want to think through is, does she have financial dependence today? Does she have plans for financial dependence in the future? And if the answer to either of those is yes, then it'll be a good idea to get some term life insurance in place. Permanent life insurance. This is where our answer of probably no is actually very different from what you would see at a lot of insurance brokerages. And the reason for that is that we want to be very careful about advising our clients to only enter into insurance where they're going to feel really great about it for the long term. And we've seen too many situations where people got policies, permanent life insurance policies elsewhere when they were young professionals, and they either chose the wrong thing or they ended up with something that ends up feeling like a huge burden. And we just don't want any of our clients to ever end up in that situation. I'll go into the details of this in future videos, but there are some significant pitfalls that Stephanie will want to make sure she avoids, but also some smart strategies that she can employ to keep options open on permanent life insurance for her future self. And that can be a great idea because permanent life insurance, when used correctly, can do great things for people and really help achieve a client's goals. But when used incorrectly, it can be a real mess. And so we want to be careful in keeping the options for good stuff open, but avoiding the mistakes. Lastly, on long-term care insurance. Normally, this would be a clear no because Stephanie at age 29 is not even eligible for the vast majority of products in the market. Those start to become available at age 30, and then a few you even have to wait till age 35 or 40. However, one thing for Stephanie to consider is that there is a growing trend among states to impose a payroll tax on people who are currently working unless they can show that they already have long-term care insurance coverage themselves. And so some people in some situations in some states might want to consider looking at long-term care insurance before they otherwise might have thought about it. So that is a quick overview of where we're going to be headed. And definitely check out our next video that goes into why it would be a huge mistake for Stephanie to rely only on her workplace long-term disability plan, even though her employer is known for offering a very generous benefits package.